we deal with working capital and how we analyze the role of banks and other institutions. Then we talk about models of working capital and we discuss about objectives and aims, why and how the working capital is used. So basically, we have analyzed need of working capital, we have understood how the working capital is managed, and now we have to discuss about the different strategies and overall revision of working capital. After these two sessions, we'll finish the chapter of working capital and we'll start the revision of each unit for this. So we'll try to finish our syllabus by 2nd of October or maximum of 4th of October. So motivate your friends to attend the sessions. So today I'm going to discuss about why people want to hold the liquidity. Because we talk about liquidity, we talk about the need of liquidity, but why people hold liquidity? Because even though it is required, there should be some motive. And what is that motive? We need to understand by different tools because as a finance person, I should know why the holding of liquidity is important. We have seen the different cash models. In these different cash models, we understood the need of holding liquidity, but now we need to understand the importance towards holding these securities. So just give me 2 minutes. I'll just share with you my PPT. So let's talk about motives for holding cash and marketable securities in working capital management. After this, we'll talk about motives of liquidity and then legal formalities. So already we have revised too many times this slide. That is what is working capital, what is the purpose, and key components. So working capital is difference between current assets and current liabilities, which we require to finance our operations, to finance our need for production cycle. In this, cash and near cash is the most important items apart from inventory, which I need to manage and control. So we already discussed this, so I'm skipping this. Let's go to the important part. In all this, we already discussed in last part inventories, motives of inventories, and how we can control inventory. Now let's talk about the second important part, that is cash. Cash is the most versatile, dynamic, and truly changing every minute because our decisions are making influence on purpose. amount, and the nature of holding of cash and near cash. So if I have extra or if I shortage, it always creates an impact over my organization. So cash or near cash, we need to have proper management of liquidity to avoid bottlenecks. So as I said, when I say cash management, I talk about immediate cash, that's physical. Cash equivalents, it means the goods which I can use in place of cash, or it can be plastic money, it can be money in a bank. So all the equivalents in a cash are there. Then there are certain short-term investments, short-term borrowings, which I can do for my fund arrangements. So these all three will be part of my cash management. Now we already learned this that there are three motives: transaction, precaution, and speculation. So transaction motives is for risk, precautionary motives is for safety in future, and speculation motives are the motive to ensure that in future, if I tend to earn the profits, I need to manage my money. Now we'll start something new to discuss cash flow dynamics. For any business, the gap between procurement of raw material and encashment of final product is required to manage efficiently. It need to ensure that this gap is very shorter, quick recovered, and most cost effective. So considering this, I need to plan my activities of production. I need to schedule my operational efficiency, and I need to take care of my market hurdles because this is the goal congress that every person should like to achieve, and he will be happy and delighted if the things are positive. Now, when I say cash dynamics, what I'm interested to understand the cash and cash balance, how it will make an impact on working capital. Let's take up three situations. One, I have surplus cash. One, I have average cash or the cash that I require. And third, I have shortage of cash. In either situation, it will make an impact over my decision power. It will make an impact over my motivation, and it will also make an impact over operations by way of availability of raw material, by way of payoffs to the different individuals who are involved in production, control, planning, and all methods, and by creating trust in the minds of debtors and creditors. So ultimately, the funds available, the nature of funds available are making a serious impact. So when I talk about restricted cash, it contradicts and reduce my ability to generate the income. It reduce the constraints to avail the benefits, and I will be in legal challenging positions to have my creativity towards settlement of different short-term obligations. So if I'm restricting my cash and compensation, it will reduce my collateral impact, and I'm not being in bargaining situation. I'll be effectively influenced and contradictory toward a situation where every time I need to go for short borrowings and invite more interest penalties as a charge. Now, what is marketable securities and how it impact on liquidity? There are certain securities which are also form a part of working capital management. So, what securities are part? The first part is government securities, second, bank instrument, third, commercial paper, and fourth is equity securities. Government securities are divided into two types. They are either bonds or treasury bills, less than period of 6 to 8 months. Government securities are mostly tax-free securities, and they are invited to create a trust and reputation. The basic purpose to invest in government securities is a secured investment and tax-free returns. When the government securities are issued, they are normally issued at discount and they are repaid at par value. Benefit of government security is they are always being sound and there is less chance of losing the money. So what I can do, I can book my liquid amounts in government securities and earn the short-term credits as well as it will help me for more benefits of tax-free returns. And if I'm holding the more government securities, it will also contribute towards earning trust of other people because my funds are secure, they are tax-free returns. Second is bank documents or sorry, bank instruments. These are certificate of deposits, short-term investments. Normally, only these two are considered from a bank because certificate of deposits can be from 10 days to 6 months are short term. They attract the interest from 5% to 9%, depend on nature of bank, depend on amount, and that will be additional earnings. What I can achieve if I select the bank instrument. The commercial paper is like fixed deposit, what we keep in a bank. The commercial papers are short term in nature. They are like a promissory note that after this period, the certain individual pays certain amount, or it is like a note of fixed deposit where the person assures to repay the funds borrowed. It is assumed that these kind of payments are for shorter and they normally have interest rates of 8 to 11%. For commercial papers, these can be issued by companies, chit funds, but they need to follow the observatory norms of SEBI, RBI, and Ministry of Commerce. Then other marketable securities are equity securities, what I'm holding of other companies. So I can also buy the shares or I can invest in shares of other company and I can try to generate more returns so that additional funds are available for working capital. Now, what is the purpose of holding marketable securities? First, what are the holding I'm doing about marketable securities? The advantage is these securities will generate an additional source. This will reduce a burden to hold and preserve them because having excess liquidity will always a question of wastage and spoil. I can enjoy the short-term advantage and earnings of their investments. Certainly, if funds are properly planned and invested for the shorter durations, this will help me for avoiding situation of ideal cash and help me to have a surplus rather than just holding the cash. So instead of holding the cash, the objective of earnings additionally will be achieved. So this type of holding is always helpful for additional income generation. And when I have additional income generation of my ideal cash, it will be maximum utilization of available resources. Many cases, I will be depend on a certain source, that is my business operations or others. But if I have purposive source of income for my investment and they have alternatives available and feasible, then in this case, my risk is diversified. I can avoid dependency on one factor for future needs and my strategic flexibility can be achieved. The financial markets are always volatile, they are fluctuating, and it is very tedious and agile task to control them. So to regulate this type of markets, to control and diversify my investment in such a way that long term they are generating the revenue or income. It is it is it is always suggested that I should go for diversification of my investments and source of fund generation that will give additional advantage for strategic decisions and better working capital management. So I need to ensure high risk with low returns because with high risk and high returns, the market is classified to be qualitative, but with low risk, high returns, it classified as better investment. So we all discussed this graph, so I'm not giving time for this. Now, what are the strategies for working capital management? The first strategy is avoid excess. Try to invest the excess funds in marketable securities and try to avoid holding them because if I have excess, this will reduce my ability to invest and earn extra. Similarly, the second, if I have insufficient, then I will be at risk of operational deficits. And for financing, I need to go for tracing out. So I need to concentrate on optimum equation or optimum balance so that my working capital trade-off is met and I'm not either in excess or shortage, but I will be having potentially great approach towards management and we need to deal with the positive mindset while financing and deciding working capital. Now let's take an example. If I want to analyze working capital. For example, this is a case of Mark and Spencer's. The Mark and Spencer's, they are having a chain of operations. They are planned to go with multiple outlets, and they decided that maximize the urban crowd as customer. So they go with the huge investments and distinguish products. They do not restrict themselves on a single product, but the variation. The sudden investments attract their charges of rent, other fixtures, and other things. And this created a situation of impact on their liquidity and crunches. Due to this huge investment for fixed asset and more working capital for retail operations, it has created a pressure over their liquidity and funds portfolio. So Marks and Spencer need to sold off their short-term investments and they have to face agile borrowings for short term. But luckily, since they have liquid asset portfolio and seasonal variation balance, they pay off the short-term liquidities by way of selling the liquid assets and their short-term investments, and this helped them to survive in a strong competitive market, even though they go with the higher investments in short term. So, what are the techniques of managing liquidity and marketable securities? Just read the slide, then I'll explain. So, the slide is itself explanatory. If I manage my marketable securities and short term cash, then the principles of holding or objectives of holding will make a drastic impact over my liquidity and working capital. If I want to manage this, then I should have a proper planning about my investment and my future needs. I should schedule my activities based on past experience. For example, suppose in particular season I require more funds, I should plan for same. In particular season, I observe that surplus is created, I should plan for same. So in short, I should focus the different strategies which will give me boost to understand how the progress is made. I should not in pull and push system where I require funds, I'm making arrangements. Rather, I should emphasize over more and more scheduled payments and recurring incomes, which will help me for strategic decisions and proper planning. I should inculcate more new methods and techniques and use the modern services like bill discounting and factoring effectively to analyze my fund arrangements and maximize the returns. by investing extensive cash available with me. I should able the different data analysis tools to forecast marketable securities and plan my in short-term investment in such a way that they will generate the benefits for me as a company in future needs. So, if I want to control holding of marketable securities and cash, I need to plan properly. I need to have investment policies and follow a proper system and method so that I can enjoy the additional benefit as well as loss of liquidity is avoided. So we have opportunity of digital transformations and less complexity of valuation models. So by using SAP, by using ERP, by using Kaizen, by using Energies, by using Tally, I'm having handy tools apart from Excel, which can be help for easy regulation and control of marketable securities and avoid complexity in decision-making process. So this will emerge as a positive considerations for evaluating an impactful understanding about my working capital needs and source to finance them. So if I talk about the motives of holding cash and marketable securities, so they are operationals, investment, and strategic balance. So if I'm holding cash or marketable securities, I'm trying to ensure that when the funds are required for operations, they are available. And instead of keeping the idle funds or surplus, I'm investing in short-term investments or in marketable securities in such a way that the additional returns are created. So this always creates a strategic advantage of additional income and trust for more than one source of income. So in conclusion, if I want to be a growing firm, if I want to achieve the successful firm without a financial considerations or limitations, I need to plan my future needs. I need to focus on future issues. I need to analyze my fluctuations in financial cycle and I need to plan my income and expenditure considering my source of income. So when I'm marketing, so when I holding the cash or liquidity or when I investing in shares or securities, I need to take in consideration that liquidity and financial health they are managed progressively. The dynamics of investments are ascertained towards growth and objective should be overall value creation and wealth maximization. So that's all about marketing, marketable securities holding. Now we'll move for the next part that is most important. How we can manage the surplus cash available. Now, why surplus cash we need to manage? Because surplus cash is always an issue for any environment. So let me share the PPT. We talk about motives. We talk about why it is important to manage the liquidity. Let's talk about strategies to manage surplus funds. Now, what is meant by surplus funds? If my current need is 1000 rupees and I'm having more than 1000, keeping that money with me is can be possible if there is no investment opportunities, but having that extra will spoilage the application and utilization of funds. This may create a negative impact because I need to protect the cash, and also many times the frauds and errors are created when surplus investments are there. So I need to make my strategies very clear about availability of funds in such a way that my liquidity indicators are properly analyzed. I should follow a method or a technique where I'm able to calculate my required funds. So basically, if I use a formula, working capital is equal to current assets minus current liabilities. As per accounting rules, the ratio of working capital liquidity should not be more than one. If it is more than one, it indicates excessive holding of cash. For example, my assets are 6 lakhs and my liability is 4 lakhs. Then I have 2 lakhs working capital. So my ratio becomes 2. So as per accounting standards, the ratio ideal should be 1 as to 1. If more than this, I'm holding any liquidity, then that type of liquidity will always creating surplus funds, and these surplus funds will always arise disputes, control issue, spoil, fraud, and wastage. Because instead of 1 lakh, if I'm holding 2 lakhs, the opportunity to invest 1 lakh and earn extra is lost. So the benefit of extra amount investment is not earned. So I need to focus and understand that whenever and whatever time it's possible, I should invest the surplus amount. Now, why the surplus exists? The first thing, it is seasonal or cyclic that sometimes my earnings are in excessive towards my regular earning due to some sudden change in demand. I get surplus products. Many times, increase in operational efficiency is also create surplus funds, and any discounts or change in government policies, they are also result in surplus funds. So, for example, now the GST has changed. I'm getting more income. If sudden festival is there, people buy my products. If I find the competitor is lack to maintain the supply in the market and only my product is available, then demand for my product will be great. So operational efficiency, cyclic change in production cycle or pattern of market returns and strategic flexibility will generate surplus funds. Now, what is the risk and cost of holding surplus funds? The ideal cache will create an issue about maintaining security, safety, and concern about spoils. Holding more than required will always create unnecessary expenses and lack of short-term investments, which can be my alternatives for proper source of finance and which can be my better alternatives for earning more profits. If I want to grow or expand or take any strategic decision, I should be supported by good financial indicators and investment decisions. This is very effectively feasible if I find the opportunities for my ideal cash or surplus cash for short term, and instead of erosion, I will try to get boost of inflationary changes and create additional source of funds. Now, what are tax implications of holding excessive cash? The first thing is increased tax burden because after certain limit, if I do the transactions in a cash, they will always create additional tax liability. Secondly, if I'm not managing the additional funds, then strategic advantage of short-term investments or fund allocation will be lost. Third, if I lack to justify the holding cash motives, it may attract overtax. That if I'm holding the cash more than 40,000 in liquidity or I transact more than 20,000 in a cash, I'm talking about companies, then in such case, involved in paying the tax. So it will be more tax implications, increase in tax burden, and I will lose the strategic advantage of additional. So let's talk about financial flexibility versus cost trade-off. Please read the slide. So if I talk about financial flexibility and trade-off, it always indicates that if I'm able to invest the financial security, if I'm able to concentrate about financial risk, then I'm able to achieve the successful position because the security, the tax burdens, and also the higher cost of implications and controllability is avoided. So indirectly, when I'm having funds and if I'm investing these funds for short terms, then they will create the optimum balance and strategic advantage, and they will give a positive trade-off for more better returns and working capital efficiency. Now let's talk about strategic approach towards managing surplus funds. Now there are two approaches. One is conservative and second is aggressive. Conservative approach talks about a safety mode or they are interested to protect and they are not interested in growth orientation. Whereas the aggressive approach talks about more growth with higher risk and they prefer returns over safety. In conservative approach, I'll hold maximum cash balance. I will ensure buffer things are available. I will make planning to keep the stock more than required. I'm not interested to take any risk or manage my surplus. Rather, surplus is considered as safety when I'm following conservative approach. But in aggressive approach, I'll ensure minimum things are maintained. The inventory and liquidity is managed just as required. The excessive funds are invested or managed in such a way that they are generating the risk rewards. So conservative approach is basically traditional approach where safety and availability is preferred, whereas in aggressive approach, the returns and less holding period is the features. So if I find both approaches are right, depend on type of organizations and its financial planning. If the organizations are traditionals and they are huge working capital cycle period, then normally conservatives are preferred. But when my goods are like FMCG goods or perishables, I go with the aggressive approach. If I'm following some higher technical or classical goods, it is conservatives which is favored. But when it is consumer favor goods, I will go with aggressive approach. So if I have excessive funds, I first need to analyze future needs. I need to jot down my abilities and opportunities. Based on that, I need to assess the profiles of short-term investments, their compliance with my requirements and market returns. Then I need to plan about my growth initiatives and then I can invest the surplus funds. Please make sure that when I'm investing the short-term liquidity or when I'm booking the profits, I always need to ensure emergency adjustments. I need to make sure that cost benefit analysis in such a way that optimal reserves are maintained, not excess, not shortage, and they should create the value propositions rather than risk or loss of financial gains. So, in short, when I'm taking a call to invest surplus funds, I need to ensure that they should not hamper my liquidity. They should not create any issue about optimal reserve size. And third most important, there should not be any impact or any relation toward the cost benefit what I'm getting if I hold the funds. Now let's talk about tax efficient and wealth building using surplus funds. So if I have optimum li- liquidity position and reinvestment of excessive liquidity, it will have a lesser tax. These short-term investments are source of finance. If I invest in investment vehicles which are tax-free or tax advantage, it will give me boost for the returns. The advance tax payments or short-term gains are planned will give me returns and reduce my tax liability. If organizations involve in periodic investments, this will create an positive signal in the minds of shareholders and their value propositions were enhanced because they will be more agile and interested to an organization who is managing their funds even in short term. So ultimately, the tax liability and value propositions enhancement is possible if I manage the things more effectively. So when I'm planning my wealth management and if I allocate proper allocation of wealth, that is capital investment, I need to also give a thought about my working capital approach. I need to focus and understand the cyclic requirement. I need to make key decision about where to invest and how much to be because diversified investments will always be good source rather than depending on one single source. If I take a positive strategic decision with professional collaboration, this will always help for wealth planning and even these short-term plannings or short-term investments are being contributors toward my vision and mission and overall financial stability of the firm. So I need to plan in such a way the financing for working capital that it will in goal congruence towards wealth maximization will be assisting as part planning and growth. Now let's take example of real world strategies. First, I need to initiate the position. For example, company X identified 2.5 million surplus cash. So if I have such huge funds available, I need to plan them properly. I need to forecast. I need to go with the strategic deployment for a shorter periods so that if I require, I can engage. And I need to find growth instruments which are going to give me better investments. Once I if able to reinvest this for a shorter period or certain period, depend on my working capital cycle and requirement, ultimately I will be in position to take the advantage and do maximum growth. So when I talk about liquidity, when we talk about surplus fund, I need to focus on better precise understanding how much the funds are required. I need to forecast my financial liability. I need to forecast my future needs and understand how much is my requirement. I need to take strategic decisions to follow a balance between risk and liquidity. I need to regulate and channelize the different opportunities for value creation and extra surplus earning as income. In short, when I'm unlocking the potential of surplus funds, my aim should be more profitability and more value creation propositions. So surplus funds is one of the opportunity for any business to manage its liquidity and strategic decisions about additional source of revenue generation. So this is all about additional source. Now, what we need to discuss is legal formalities about working capital. So, we'll start discussion today, and tomorrow we'll summarize the working capital again, and then we'll start a revision for Unit 1, 2, 3, 4, and 5. So, today is 26th. So, by 4th, we'll finish the syllabus of AFM with revision. And from 3rd onwards, there will be no online session for working capital. Sorry, for advanced financial management. So, this is the last part which I'm explaining as a part of session. Then I'm going to take the each unit for 1 hour session as a revision, and we'll discuss about how to solve the papers. Those students who want additional sessions about numericals will schedule it offline for 2 Saturdays and plan accordingly. We have started our sessions in 24. Now almost 1 month or more than 1 month we have completed. So let's talk about legality. I'll share the PPT. So let's talk about legal formalities of working capital management. So this we all repeated. I'm not discussing. What are the regulatory compliances which is essential about working capital? First, I need to adhere the accounting standards mentioned by Indian authorities and general accepted accounting principles. I should have quarterly compliance and disclosure of audited reports and complete my statutory and financial obligations like TDS, disclosure of accounts, and publication of financial position. I also need to ensure goods and service tax compliance, its payments, and e-challenge compliance time to time for regulatory compliance. I need to enforce a system to avoid disputes over contracts and commercial settlements. I should follow a proper validity about legal compliances. It can be government, it can be taxation, or it can be account standard, so that it will avoid the burden on my financial ability. So I need to have a particular credit policy. I should make proper records and examine the standards and procedures followed. I should always mention disclosure and disclaimers whenever the risky returns are done, proper credit agreements and enforcement of short-term investments with consultation and permission of board of directors and resolutions after ensuring the opportunities should be taken. In case of banking and finance, I need to ensure that I meet the deadlines of repayment. I should avoid excessive borrowings or short runs. It is a cash credit or overdrafts. I need to go with proper hypothecations, mortgages, and approaches. I should avoid aggressive burden and borrowings. If I'm using short-term capitals for working capital finance, I should be optimistic and have a proper approach regarding rate of interest and ensure the loans for working capital are at low rates and for more periods. I should take the advantage of factory and bill discounting because this will help me for more aggressive technical consultation and the financial help. In any situation, the ad hoc financing, that is temporary financing agreements, are a strong backbone if I want to have a versatile and positive approach toward, towards working capital management. So I need to concentrate the proper allocation of cash credits, working capital loans, and technologies like bill discounting and factoring. Now it's almost 11. When you discuss these formalities, then we'll talk about contraction operational formalities, then inventory. We have to talk about risk compliances. Then we'll talk about digital formalities, best practices, and then we'll end with this. Then we have one more topic to discuss is a factory. So in tomorrow's session, we'll discuss these two topics and we'll revise our fourth unit. Then we'll start our revision of first unit of advanced financial management. So by 4th of October, our syllabus will finish. It's humble appeal to those who are not submitted CCE. Yesterday was the last date, so make sure that today you are submitting your first CCE. Similarly, those who are not submitted OGT, please observe that you are submitting in time. So thank you all of you being part of this session. We'll meet tomorrow at same time. Wish you a wonderful day ahead. Good day.